Good afternoon, everyone. I'm Tim Richards, Technical Services Manager of the Managing General Agents Association. And on behalf of the MGAA, I'd like to welcome you to our briefing this afternoon. This is being delivered by Dynarisk on the subject of driving growth, mastering personal and SME cyber insurance markets. Before I introduce our presenter, I'd just like to run through a couple of housekeeping points. Please ensure your microphone and camera are turned off. If you'd like to ask a question, feel free to use the chat button at the bottom of your screen. Time allowing, these questions will be asked and answered at the end of the event. If we run out of time, questions will be answered after the event. This presentation is accredited for CPD hours if relevant to your ongoing professional programme. This briefing is being recorded, and a link to the recording will be issued post-event, together with the slides and our feedback survey. Please take the time to complete the survey. It will take no longer than 2 minutes and allows us to continue to deliver the best possible future events to our members. So today's briefing, once again, is on the subject of driving growth, mastering personal and SME cyber insurance markets from Dynarisk. So let me introduce you to our presenter, Andrew Martin. Andrew founded Dynarisk after identifying a need for personal SME cybersecurity solutions. He has provided intel to government institutions such as the FBI, US Secret Service, Interpol, and CSIS. Andrew is recognized as one of the top 200 cybersecurity experts globally by the SANS Institute and works closely with insurance industry partners globally to help them grow their cyber product or program. So without further ado, enjoy the briefing, everyone. And Andrew, over to you.
Great, Tim. Thanks very much. Thrilled to be here and working with the MGA Association to bring some content to you on how to drive growth and mastering personal and SME cyber insurance. These are two markets that we at Dynarisk are very close to. I think we had a little brief introduction on my background, but a little bit more about Dynarisk as a company. We've been around since 2016. We're the first intelligence-led cyber insurtech provider, and we'll talk about a little bit more about what that means a little bit further on in the presentation. We're a provider of consumer and SME risk management tools and support services that support insurers, reinsurers, brokers, and MGAs to grow their cyber book, improve their loss ratios, and also protect end policyholders at the same time. We've got about 30 clients around the world in every continent. We're protecting hundreds of thousands of consumers and tens of thousands of businesses. So we've got great insights that we've learned from supporting clients in all sorts of different geographies and all sorts of different kinds of policyholder. And what we do is we combine a bunch of different cyber risk management capabilities in one place: dark web monitoring, hacker chatter monitoring, scanning, and employee education. To make tools really simple and easy for end insureds to consume, or for our insurance partners to use to scan and monitor a book of business, whether that's consumers or SMEs, for potential losses that might surface in their book. I think Tim already gave a great introduction for my background, but what's not in these slides is I used to be a hacker when I was a teenager. I was not a particularly good one. I was a bit of a naughty one, but I reformed my ways, thankfully, before I did anything too naughty, and got into protecting large corporates and things from people like me quite successfully. And I noticed that there was a gap in this market to provide more tools and data to the insurance market when we started pitching our solutions to a few insurance companies way back in 2016. And now insurance companies and that market, insurers, reinsurers, MGAs, brokers are our sole focus. And we're having great success there. So just to recap, what we're going to be learning over the session and what you're going to be able to report back that you've learned at the end of the session. You're going to be able to describe how to prospect for new cyber insurance business opportunities. You're going to know how to be able to explain the different types of distribution and who's interested in purchasing cyber insurance. We're going to be able to help you summarize tips for how to structure profitable cyber insurance deals, and how to gain insights on how to set up the right cyber insurance products and how to structure those products. And we're going to outline how to manage the potential for losses in this book. Just to be clear, we're not insurance people, we're cyber people, but we have a view of how, over 30 clients are using our technology and are going to market in various territories with various types of policies to be able to bring to you what's working and, where some clients have maybe had a misstep and how to avoid some of those missteps. So what do we need to consider when it comes to prospecting for a new cyber insurance business? Cyber can be a hard sell, right? This is not a hurricane or a flood risk or a D&O risk. It's hard to conceptualize a hack, right? Hackers breaking into someone's network, holding it to ransom, stealing money from bank accounts. For the non-technical, the non-tech savvy business owner or senior manager, it can be very hard to convince them that they need to buy a cyber product because the client often doesn't understand that they have a risk. And in some jurisdictions, there are mandates for having cyber insurance in certain situations, or in certain sectors, they're more heavily regulated, which drives the need for cyber insurance. And then in some sectors, they're very lightly regulated, or there are not the same kind of stringent requirements which drive the need for cyber insurance. So it can be a hard sell. Of course, for a company who has not experienced a major hack in the past, they'll think, this will never happen to me. We are a 50-person auto body repair shop. We're not going to get hacked. Well, sure enough, in the US, a tech supplier to the auto industry, CDW, was just hacked, and that hack has led to catastrophic damages within the US auto insurance industry. Over here in the UK, we've had the hack of a supplier to the NHS, which has ground blood test results and certain other medical procedures to a halt. So while a lot of companies will say this will never happen to me or to us, in reality, it does happen. It happens far more frequently, unfortunately, than companies would like to admit. But this is where the real opportunity is. There is a real opportunity to educate and drive awareness within this market for the need for these types of products. Because I can assure you, if you've got a cyber insurance product in place, if God forbid, one of these catastrophic events might happen to a consumer or to a small to medium-sized business, there's going to be some support to help them recover from that incident or reimburse losses, et cetera. And that can mean the difference between a business going bankrupt or continuing to trade. But if we just take a look at what the cyber threat landscape is, we won't spend too much time on this. I'm sure you've all read a number of stats, but 4 in 10 businesses report being insured against cyber risks in some way. But on the flip side of that, that means 60 or 65% of businesses do not have the insurance. UK businesses are losing over £4 billion a year due to cybercrime. And cyber attacks are, a top 1, 2, or 3 issue for many of these businesses after, geopolitical risks or, trade risks, increasing tariffs and things like that. So cyber risk is definitely up there on a board or a senior leadership team's agenda. And cyber attacks on SMEs are average of £31,000 of loss per day that an event happens. So if a SME is ransomed for even a week, they're suffering some serious losses, which could potentially put them out of business. Moving on to the consumer cyber threat landscape, we do a lot of work in the consumer space as well. Again, you've all read the stats, but 1 in 10 people in the UK have fallen victim to a scam. That's a massive number of people. Online shopping fraud is a huge cost to a number of victims, where they'll order fraudulent goods. They buy a used iPhone, they get sent a iPhone box with no iPhone in it, or cryptocurrency scams have been particularly prevalent recently, where someone will be tricked into falling for a get rich quick scheme, and they'll send money to a fraudster and not receive anything in return. So there's a number of different frauds and scams that that victims in the UK are falling for. Of course, phishing has been around for a very long time, but it's implicated in 85% of all the incidents that we see. And about a quarter of the population of the UK and have at some point in time become a victim of identity theft in some way, shape, or form. So the small business community, the consumer community are being attacked all the time. There are successful attacks, and they are prepared to spend to ensure against falling victim to some of these attacks. But how do we empower MGAs to have these confident conversations with their prospects, to educate them on the need to have some insurance coverages when their level of understanding on the topic might put them in the skeptic category and not be at that stage where they're ready to buy something. So clients need educating on these risks. They need to be educated by someone they can trust, who has deep product expertise. This could be a broker, this could be a bank, someone on the distribution side at a bank that's liaising with customers on a day-to-day basis. This could be someone within your MGA. There needs to be someone who has that real product expertise, where you can build up that trust with either the end distributor or the client directly. But the way you can get over these hurdles of this lack of awareness, and it's never going to happen to me, is with real data that proves that there is a risk to that consumer or to that small business, so they can take their head out of the sand and realize, oh no, this risk could manifest itself in our business or for me personally, and I need to do something about it. And it's very important to back up anything that you say to one of these prospects with real evidence. Gone are the days where a broker sits down with a client and the broker says, hello, client, we think you're at risk of cyber attack. You should have a policy. And the client says, well, why do you think that? Don't just throw some statistics at me. What evidence do you have that my business or me personally is at risk? And the last tip of this sort of education piece is we have to not just think about talking to clients at policy inception or renewal dates. There's got to be a continuous process of education during that policy period or during the period of quotation, where you're going back to that client and educating them a little bit more, bringing them along that sales journey, which, as we'll talk about a little bit later, we have to have different techniques to engage those policyholders or those prospects, depending on the size of premium, right? Obviously, you're not going to have someone speaking one-to-one on the phone with a 50-pound premium sort of client, but you can use technology and things to make that easier. So our first topic to really dive into here is to let the data do the talking. And we do that. We enable our clients to do this by doing cyber risk assessments. We work with a number of MGAs all around the world, Delta Insurance in Asia, Optimum Specialty Risks here in the UK, Ridge Canada and Box Insurance in Canada and Latin America, and a number of others, Digimune in Africa and some others. And what we do with these clients and many others is provide them data to carry out a risk assessment on an end user organization. You'll have seen these types of risk reports from other MGAs, Coalition, Cowbell, At Bay, etc. A lot of the feedback we get in the market from brokers or from MGAs is those scans are great. They're provided by those MGAs, and that's fantastic. They're great reports, but customers really like having something which is unbiased, which is from a neutral third party, which, we are not incentivized to actually sell insurance. We don't get paid any commission or anything like that. So, if you're getting a report from a cyber MGA, one of those names I might have mentioned, that data is being used for their purposes. It's not being used for your purposes or for independent purposes by a broker. So our clients like to have something that's an independent view from a third party. So what we do is we conduct a thorough risk assessment of a company's level of cyber risk. We do this by looking at a company's digital assets, their website, their email, their Exchange servers that they might have. We scan them for vulnerabilities, and we check to see if hackers are trying to break into those assets, or unfortunately, if they might have already broken into a company's assets. It will assess, how risky that company is in relation to peer companies similar to them, companies in the same sector, or a company of 50 to 200 employees will have a different risk profile than a company of 10,000 plus employees. And then you can get a very good sense check on how risky is this company, and where might their gaps be, which they could either fix on the technology front, or they could insure against by buying a policy. And we, of course, advocate for companies to do both of those things. You don't want to just fix the technical issues. You don't want to just purchase an insurance product. In order to protect yourself against cyber risk, you need to have both of those elements. So how does this risk assessment technology and process support prospecting for clients? Well, if you're a broker or you're an MGA, you can scan 100 companies, 1,000 companies, 10,000 companies, and provide them these reports. And the reports will provide them some genuine value, some tips on how to make their company safer. And if they would like to purchase an insurance policy on the back of that, they certainly can. But first and foremost, you start providing value to that end user without asking them for any money yet. So if this is during the quotation process, no money has been exchanged. You've given them the report. They can start to see some value in the services that the broker or the MGA is providing to that end user organization, and that's building trust with your brand. That's building engagement with your brand, where then they might say, "Okay, I see some risks here. Now, can I have a quote on a potential policy?" This helps you streamline the prospecting by checking for eligible clients, or in fact, clients which have the most need for a cyber product. So we have clients who run scans, and they scan clients, and they identify that, that client has actually been ransomed in the past, or there was a hacker poking around on their network, 2 weeks before. And that might cause the submission to be declined, because that's going to be too risky for a client to take on. On the other hand, you might scan some prospects and find some issues on their network, which they didn't know about, and they were very grateful to receive that information. And then, of course, they're going to be more receptive to receiving a quote for the cyber insurance once you've determined that they're not ineligible for getting a policy. And then, of course, this supports detailed conversation. So you're not just talking about the theory of cyber risks and issues. You're talking about, here's a real issue with your company right here, right now, in black and white on this report. But this information can also support managing down loss ratios, right? So we can identify, or the risk assessment process can identify risks to these companies before they become attacks. Let's find some of these open, easily hackable services before they get attacked. Let's find some stolen credentials for the CEO and warn that person about that before the CEO's email account gets taken over and is used to send business email compromise messages where the company gets defrauded out of $200,000 or pounds in a scam. We can minimize the impact of incidents or prevent them altogether. So a hacker might get into the network, but because the company has turned on multi-factor authentication in more areas of their network, the attacker might not be able to move within their network as easily as they could have before those controls were implemented. And so ultimately, we can prevent or minimize claims with this type of data. We'll never, no technology company will ever claim to be able to eliminate all claims. That's not possible. That's not what the insurance industry wants. But if let's say the industry average of loss ratio is 50% or so, our clients are seeing loss ratios of 20%, 25%, 30%. So we know that the data has a big impact on how the loss ratio can come down over time. This is an example of 1,000 SMEs that we've done scans on for another client. And what we're seeing here is the funnel, right? We scan 1,000 companies. We have some data on 92% of companies, which is great. There's something out there to be found on these companies. 41% of those companies have something high risk going on there. They've got a vulnerability that might need to be closed. They've got some stolen credentials that hackers might have gotten their hands on. We've got 15% of these companies with critical risk signals, things that company really should action to reduce their footprint. And then 2% of these companies were basically already hacked or have all the telltale signs that they will be hacked in the very near future. So if we spin this in a bit of a different way, you can have quality cyber insurance conversations with at least 40 to 50% of these companies. Maybe you don't want to have those cyber conversations with companies where they only have, one or two small things wrong, because it's not going to be, enough to sink their teeth into. And then also, you're probably not going to have those cyber conversations with companies that have already been hacked, because that might, affect their ability to get the insurance in the first place. So just by doing some discovery within your book of either existing insureds or prospect insureds, you can very quickly hone in and see where the opportunities are to sell into those particular companies. And I think that dovetails very nicely into our next topic, trends in distribution. The cyber insurance market today is looking very competitive. There's a number of products out there from traditional insurance companies and MGAs. There's a big push on price right now. Of course, buyers always want the lowest price with the highest amount of benefits, but we don't always want to see a race to the bottom sort of mentality on premium. And it's very hard for a lot of these insurance companies or the MGAs to differentiate, because there are now quite a significant number of cyber insurance products on the market. So clients are looking for the technology and the services to help them stand out, where, in the past few years ago, maybe just a standalone cyber insurance policy was enough. That is not what we see in the market today. The market is really needing a holistic risk management solution, not just a policy with services and technology, preventative risk management technology bundled all there together. And moving on to distribution, the first couple, of course, direct and broker-driven technology, that's a given. But where we're seeing the most innovation is in the embedded models, where clients of ours are coming up with all sorts of different new and novel distribution methods to embed cyber insurance products for that personal and SME sort of segment. This is not, at the large corporate end, certainly not, or not, mid-market businesses. Those are still very well served by the broker segment. But we're seeing clients bundle the cyber insurance with bank accounts, broadband packages, home insurance, directors and officers in insurance. We're seeing cyber getting embedded with mortgages and personal loans or business loans. So, some of the criteria for taking out a business loan for many hundreds of thousands of dollars or pounds might be to have an insurance product on the back of that. So the bank or the lender can have some confidence that they're going to lend this money. But if a cyber event happens to the lendee company, they're not going to lose the balance of that loan from the company, and the company is going to be able to pay that loan in the event of a catastrophic situation. Credit card benefits, motor insurance, warranty bundles with the sale of PCs, etc. This is where we're seeing a lot of innovation in this embedded segment. And we'll talk about this at the end. But if anyone has any questions about different distribution methods or trends in this embedding theme that we're seeing, please feel free to reach out to us afterwards. And these are the types of distribution bodies who are looking to distribute these products. Of course, we know the direct and the broker-driven markets. I don't think we need to speak about that in particular detail. But on the embedded front, We're seeing lots of different banks, telcos, energy and utility companies, membership clubs, benefits providers, all moving into this embedded space. Why are they moving into this embedded space? It's an opportunity to increase revenue streams, right? If you look at traditional banking products or traditional telco products, they're very competitive markets. The gross and net margins are very thin. There's a lot of competition. So the more additional products that they can bundle in with their core offerings provides them ancillary revenue streams with relatively low additional effort to roll out these capabilities. Where if the bank just adds an additional product to a customer's bank account at $1 a month, and they're taking a 20-30% commission off that times a very large number of banking customers, those can be very material amounts of additional revenue that these distribution partners can realize. So the driver here is really increase revenue for these distribution partners while providing a service that the end client can consume and use to reduce their risk of having some of these catastrophic events happen to them. And we wanted to share with you some sales insights and tips that we see in our client base. As I mentioned, we're serving about 30 insurance sector clients in here. And so we're seeing, the things that are going well, the things that might not be going as well, and we can share those tips with the market for you to take away and think about how you could leverage these tips in your own business, whether you're already selling cyber insurance products today, or if you're going on that journey, you'd like to start selling cyber insurance to your customer base, and you're not sure where to start or how to get that up and running. So wherever you are in the journey, we've got insights that can help you on that journey. But the first insight is pricing and commission. So the pricing for cyber insurance varies hugely, region to region, segment to segment. But it roughly falls into ballparks like this. In the consumer segment, policies could be anywhere from $1 to $50, micro SMEs 25 to 100, SME 500 to 5,000, and the larger you go, the higher the premium gets. But where we focus a lot is that consumer, micro SME, and SME level, where you've got these embed opportunities, you've got very large distribution, able to access very large pools of potential premium, but price is everything at this point. There is a big price difference between asking a consumer to part with $50 versus $2. And so what we see is, the first mistake that a client might have is they try and over-engineer a product. They provide too many coverages, the limits are too high, and ultimately the price point is just too high. And for these particular market segments, you might have very price-sensitive customers where they first get pitched £1,000 product, but they're only really willing to spend 500. So really, the first hurdle is just getting the pricing right to a level where you're going to be able to achieve a sale in the first place. Commissions for distribution partners, we see very wide differences here, but anywhere between 15 to 50% commission is going to the distribution partner, more commonly in that 15 to 20% range, but we have certainly seen some outliers in that 30, 40, 50% range. And we're also seeing that by including embedded risk management tools in the policy, our clients are typically securing 10, 20%, sometimes higher improved reinsurance rates. So you're able to demonstrate back up to your capacity provider that you're actively managing the risk of these policyholders, and as such, you can negotiate some better terms on your treaties with those reinsurance partners. Another insight we've got is on driving higher margins. So this is a little bit of text to work through here, but the key here is that you want your clients or yourselves to be able to increase your margin for the same sales effort. These are just very indicative numbers. This is not reflective of an actual client. This is conceptual, but backed up by our insights from our clients. So if you were to be selling just a regular insurance policy on its own for, let's say, $100 or £100, you're probably making 10% profit on that policy. When you strip out all of the costs, all of the commissions, et cetera, you're probably making somewhere around 10%. Maybe it's more, maybe it's less, but it'll be somewhere around there. If you approach the market with a holistic suite of risk management tools, you're able to increase the margin on this product for the same sales effort. So if you embed risk management software alongside your policy, if you embed some cyber support services alongside your policy, you'll see the indicative retail prices there. You're able to retain some margin by including those additional services. So if you're just selling an insurance policy loan, you're making, let's say, a $10, £10 profit on one sale of one $100, £100 policy. But if you're bundling additional products together in with that insurance solution, you're going to be able to increase your gross or your net margin. And in this case, in this scenario, by 50%. Of course, every client's different, and there's lots of different considerations to take into account here. But for illustrative purposes, for expending the exact same amount of sales effort, in this case, you'd be able to have a revenue uplift of about 50%. Now, if you put yourself in the distributor's shoes, let's say that the distributor has a 20% commission that they're earning on this particular arrangement. So they're going to make $20 or pounds on the sale of a $100 a pound policy. But if we embed the risk management aspects into the solution, and we push up the price of that product a little bit for the holistic suite of things that we're selling to that end user, their commission also goes up by 20%. So if you've got a KPI this year to increase your GWP or to increase your brokerage or what have you, if your clients have a KPI to increase their brokerage, which we assume they do, this is a great way to demonstrate how you can go and increase that revenue or the brokerage uplift by the inclusion of risk management services and tooling. And then if we go into another sales tip here on improving quote to bind rates. So, there's nothing more frustrating than getting some submissions in from some very chunky risks potentially, but you're not able to bind them for whatever reason. There are clients that we've seen where their quote bind rate is, let's say, 5%, 10%. They're relatively low. They've had some struggles in this market. But when they add the risk assessment data, where they provide a report to the end user, hey, this is the risks that you're facing. There's some tangible hacker activity occurring on your network. We've seen that quote bind rate go up to 20%. Which is a 3x improvement on that quote bind rate for these types of customers. So just providing some real life data can dramatically affect your win rate for the sale of those policies with relatively little effort. And then, another struggle we see our clients having is they want to reduce or they want to improve their quote rejection rate. So we have other clients where, they have no problem getting quote submissions, and they've got lots of deal flow. However, they're needing to turn down a number of these quotes for varying reasons, and some of those reasons are, in some of the policies, there's language that requires the end company to do employee training, let's say, or requires the company to do vulnerability scanning on a monthly or a quarterly basis. But, many SME companies don't have these capabilities. So you get sent a quote submission, and unfortunately, you have to reject based on the underwriting guidelines that you have. Whereas if you were to improve your program and you were to bundle in risk management tools as part of the suite of the insurance product that you're offering, you can improve that quote rejection rate. So we've seen clients where they're rejecting approximately 40% of the quotes that are being submitted to them. But if you embed these risk management tools and processes in your cyber insurance product, where every policyholder will get given these things by default, then your quote rejection rate can go down perhaps to 30%. And that's an improvement of 10% on that quote rejection rate. And everybody here, can go off and do the math on what that would mean to your particular organization. But, winning 10% more business on a substantial book of business translates into some really great increases in premium for our clients. And just to throw some stats out there, our clients are seeing 50% increases in GWP, 100% increases in GWP, 40% improvements in quotation rates, etc. So we can have some real dramatic effects on our clients' bottom lines by getting them to use technology and data to help power those sales. And then I think this is the last insight I have to share here, but improving cross-selling. So there are lots of clients, brokers and MGAs, and they have very large books of non-cyber business. They have lots of D&O or professional indemnity or motor policies or what have you, and they really struggle to cross-sell cyber into it for various reasons. Most of the reasons are, the client doesn't understand why they need to buy it. So, we have seen clients where they've got a cyber cross-sell success rate of approximately 5%. So, for every 100 clients that they have, they've been able to cross-sell cyber insurance to 5% of them or 5 of them, which is quite low. And from what we've seen in the market, our clients want to at least be able to achieve a 20% penetration. But the clients wonder, where should we focus? We could sell the cyber insurance to anybody. How do we focus? Well, you focus with data, as we talked about earlier. So you don't go off and pitch a 5-person hair salon where there's no tangible, risk profile for hackers to get their hands on. Of course, if they want to buy it, that's great, but they're less likely to buy than perhaps a 50-person accounting firm or a law firm or someone like that who, there's some stolen passwords out there. There could be a vulnerability on a VPN somewhere where there's a hook for the hackers to be able to get in. So just by focusing on the companies with high risks and the companies with critical risk signals, you can right away focus in on companies that are going to be much more receptive to buying a product, and that's where you can focus your cross-selling efforts. And then, of course, maybe don't focus your cross-selling efforts on companies who have already been hacked or suffered a significant event and would probably get rejected in a quotation. And then the last major topic we'll talk a little bit about here is managing loss control. So preventative measures go a long way to improving the risk of your overall book and the health of that book. And we see our clients and others offering all sorts of free things to their client base in order for them to become better risks. Free training resources, free threat intelligence, free risk management software and monitoring software, and risk advisory services. The biggest barrier to these things being used is establishing that communication with the end user company and giving it to them for free. So bundling that cost into the policy, into the initial price that they pay, not asking them to pay something in addition once they've already paid for a policy. There's nothing companies dislike more than purchasing a product, a cyber insurance product, and then being told, well, here's something else you can buy. They've just made a purchase. They've just parted with money. They don't want to buy something else. They want something for free. But when we say for free, the cost is absorbed within the policy itself. To keep that loss ratio, below industry averages, you need to ensure regular ongoing engagement with those end policyholders. Send them alerts. Tell them about the latest vulnerabilities that have been found. What 0-day vulnerabilities have come out recently. A 0-day is a vulnerability which doesn't yet have a fix for it. Send these clients alerts to say, hey, we found new dark web data records. Log into our portal to go see what those are. So creating that active engagement with the policyholder helps them become better risks, but also helps you renew them when it comes up time to renew. So, if insurer forecasts, let's say a 5% claims frequency on that policy in any particular year, that means 95% of the companies that you've sold a product to have perhaps gotten no value over that 12-month period. And you're going to come up for renewal, and they're going to think, do I really want to pay another X amount to not have a claim next year? And so we see a lot of clients with a churn problem within their policyholder base. So proactive risk management with ongoing engagement helps you, keep your brand top of mind and show that that insured some value over the life cycle of that policy period. They don't just have to wait around for a claim to happen. And then, of course, do some checks at the point of underwriting and leverage that risk assessment data. So not all companies are created equal, as we saw from that funnel above. Companies who are relatively low risk, just let them through. Maybe don't even give them a proposal form because you've assessed them to be very low risk. But if you get a proposal from a very risky company that's got lots of vulnerabilities and a very large digital footprint, and maybe hackers have already stolen some data from that company in the recent past, maybe that's going to be a quote that you either reject straight out, that's outside of our appetite, or you refer it for additional underwriting, additional diligence, follow up with the broker, etc. So you can use the data and scanning capabilities in that risk assessment and underwriting process, which ultimately leads to improved loss ratios. So what is cyber risk management software? We talked a lot about concepts, but basically, we're combining lots of things all in one place in a technology platform. So we do data breach monitoring, staff education or personal education for consumers, vulnerability monitoring, dark web monitoring, router scanning, and other capabilities. So we put lots of different capabilities in one software portal to make it simple and easy for prospect insureds or bound insureds to be able to log in and derive some value from the product that you're selling to those end users. And we can also do regular reviews of a portfolio. We can scan hundreds or thousands of companies at any particular time and say, okay, out of those 1,000 companies, who are the riskiest? So it's crucial for MGAs to review their policy holders on a regular basis. Not necessarily, daily or weekly, but we find clients really like to do a quarterly review or at least a half annual review where they can take a look at their insureds and see, are there any potential bombs that are going to go and drop here? Or are there some changes we should be making in our criteria for what risks we accept when we go through our next renewal period, et cetera. So without that insight, you're sort of flying blind, right? You're flying a plane without autopilot, without a co-pilot, and very little training. Whereas with some risk assessment data and ongoing portfolio monitoring behind you, if you're flying a plane, you've got a co-pilot, you've got an autopilot, you've got the training to be able to get that plane to its destination safely. And we know our data works. We've been able to predict hacks and claims 400 days in advance, where we've seen a threat actor carry out a ransom on a particular company. But when we look back in time in our data, we see, hey, 400 days in the past, there was this particular vulnerability on this particular server, and we know that that is highly, highly correlated with hacks and claims activity. So as I mentioned in the past, we would never, pretend to be able to predict or prevent all claims. That's not possible. But, even if you can prevent a handful of claims or reduce the severity of those claims, your loss ratio can go from marginally profitable to much more profitable in a relatively short amount of time. Just going to wrap up here pretty quickly, and then we'll leave it for Q&A, but some considerations here. Cyber insurance isn't one size fits all. Every client has a different budget they're willing to spend, and what's important is to fit your product into the budget that the client is willing to spend. Intelligence and insights are what shape those educational conversations you can have with those clients or with your distribution partners to enable them to be able to sell your products. The insurance coverage is the safety net. But what you really want is to prioritize prevention. An ounce of prevention is a pound of cure, as they say. And the biggest barrier to help your clients overcome is the education barrier, to empower your policyholders or your distribution partners with the right education so that they can educate their customers into the need for purchasing the cyber insurance product. So just before we open it up to questions, we'll leave you with some free offers. We're happy to scan portfolios of insureds or prospects for MGA members for free. There's no commitment. We'll sign a non-disclosure agreement if you'd like us to. We'll run a scan with no commitment, and we'll share whatever data we have back with you. And 9 times out of 10, you'll really enjoy the results that we share. So we can either do a free portfolio scan for you, or we can scan 5 or 10 companies on an individual basis for you as well. If you're not ready to scan a whole portfolio of potential risks, we can just do a subset. And feel free to get in contact with me, Andrew@Dynarisk.com. We'll answer some Q&A here, or browse to Dynarisk.com or speak to your Dynarisk representative if you're already in touch with us to get access to these free scans and free reports. And just to recap on the learning objectives that we've discussed today, we've described how to help prospect for a new cyber insurance business. We've explained the types of distribution and who's interested in purchasing these offerings. We've summarized the effective price points and product types which customers are looking to buy, and we've outlined how you can help manage your loss control. And of course, if you'd like any more information on any of these topics, you can contact us through the MGAA or myself directly. And with that, I think we'll open it up to questions.
Thanks, Andrew. And we do have several in the chat. So let's start at the top with the first one there. Do you think that buyers of personal cyber insurance, especially when bundled into another product such as home insurance, understand what they are buying?
So there's 2 different buyers here, right? There's the buyer of the product on the side of the home insurer, where an insurance product person at the home insurer needs to understand the benefits of the cyber product which is being purchased and given to those end customers. So they definitely need educating into what are these coverages, what are the benefits, and how will that benefit the end customer. And then if they are empowered to understand those features and benefits, they then need to translate that into the sales and marketing copy which go out to those end consumers, who are the ones who then receive the policy paperwork. And that's where we see, a lot of clients need a lot of help, is that translation piece. So to go back to the question, do we think that the end policyholders understand the product that's been given to them? In some cases, yes, and in some cases, definitely not, because they have not been communicated to, they have not been marketed to with the right, terms and terminology and language, etc., to empower them to understand what it is that they've gotten. And so, when we roll out a new proposition with one of our clients, we spend a lot of time on that go-to-market go to, communication with customer aspect of the program, because that is absolutely essential to get that right.
And a follow-up question, Andrew, really to the previous one. Just to add to the previous question, what do you see as the value for end users who are consumers?
So everyone will see different aspects of value. Personal cyber insurance products come in a variety of shapes and combinations, lots of different types of coverage, and it goes back to price point, which I discussed earlier. So some of our clients, they have a very low price point. They need to achieve something for, dollars or cents or what have you. And if that's the price point, then there's only certain things you can put into that product. Whereas if you have a higher price point, more wiggle room in that budget, you can include more coverages, more services, more software, etc. So the level of benefit that the client gets is commensurate with the price point that that end client is willing to spend on that benefit. And so depending on what those benefits are, the clients will see different levels of engagement with certain aspects of these policies. So we've seen deals where clients have very low engagement. We have seen deals where clients have had very high engagement and great claims and great feedback from the end customers. But it comes down to how is the customer educated into knowing what this benefit is? How do they make a claim? How is it important to them? And then actually being able to communicate to that end customer, where if you're 4 steps back from being able to communicate with the customer, your ability to educate them is very low, and as such, engagement can be very low. But if you get closer to that customer, or if our technology can help you get closer to that customer, then that engagement goes up 10 times, 20 times. We have some clients with very high engagement, and that's because they've set up really great communication channels with that end customer or with the broker who's serving that end customer. But on these particular questions, I would suggest reach out to me directly. We're happy to share insights from what's worked or what hasn't worked for some of our other customers, and of course there's no charge for that.
And another question, Andrew, are there any SME sectors that are more susceptible to cyber attacks than others?
Absolutely, there certainly are. This is something we can definitely help you identify by doing a portfolio scan, free of charge, of course, to help you identify where some of those areas of risk are. But generally speaking, the professional services, doctors, dentists, lawyers, businesses where they have either a lot of data or potentially access to a lot of cash, and relatively small teams, where they won't have a cybersecurity expert. Cybersecurity will be outsourced to somebody, etc. So those professional classes, lots of attack activity there, a lot of activity in the manufacturing, construction, materials sectors, transportation haulage companies. These are businesses which, again, they contract or transact relatively high dollar or turnover figures, but they have reasonably unsophisticated technology teams that support these companies. It's a managed services provider. It's Andrew the IT guy who services everybody, and they haven't invested in security controls like a bank or a wealth management company might. So we definitely see that there are sectors that are more open to having the cyber conversation than others. But we have clients that sell into the farming sector, and even they can convert skeptics into clients when they have the right data at their fingertips.
And so the next question, we've got 2 more and we've got 6 minutes, so I think we'll get through these. But given the tech world you're in, Do you use AI to profile consumers or their answers? And if so, how do you use it? And if not, what do you think the future looks like for this?
So I'd say we're on that journey. We don't use the AI to profile consumers today. What we have found is the insurance market wants relatively low touch with these consumers. They at least in the cyber use case, it might be different in the life and health use case where you want to know everything about someone's drinking and smoking and driving habits, etc. But in the cyber world, we built an app many years ago. We put it on the App Store for end users to download and use our app, and we got very little usage on it because people just didn't want yet another thing in being intrusive in their day-to-day life. So as much as AI and those advancements are really fabulous for a number of different use cases, that consumer personal cyber use case is not one where we're seeing a tremendous amount of demand for that. There's going to be, of course, things that we're working on in those areas, but having an agent on your phone which assesses your risk of falling victim to an attack, people just don't want to install stuff. Where we see the most traction with our customer engagement are, on the topic of stolen data. Hey, I've had data stolen in a data breach. What do I do? Because that's something tangible that's happened to that person that they can take action on. And then, of course, people picking up the phone and calling us. We didn't talk about services too much, but we've got basically cybersecurity experts on call, and people will call us and say, "Hey, I've got a virus on my computer. What do I do? I've been sent a fraudulent email. I clicked the link. What do I do now? My son or daughter is being sent unsavory messages on social media sites. How do I improve their privacy?" So we really find that consumers want that tactile feedback from an insurance provider.
And so the last question, Andrew, which is to do with fair value, which I thought might come up. Where the cyber insurance product is embedded, is it normally bundled with a connected primary risk with a common risk management benefit, or can it be offered as an added value benefit? And if so, how do you demonstrate value to the end customer, which is not directly connected to managing the risk of the primary cover?
It's a very long question. I don't know that we have time to answer all of that right now. We have seen both of those setups. It depends on what jurisdiction. It depends on what the connected device cover is. There's lots of caveats around that. In some places, that's really an uphill battle to do something like that. And then in other jurisdictions and markets and different embedding scenarios, we do see clients do that. And, how you show the value comes back to how can you communicate with that end customer? How do you reach them? How do you email them? How do they get made aware of the benefits that they have? And that's very different. All of our clients have different deployment scenarios, and some are very low tech and some are very high tech. So I would say, reach out, let's have a conversation about that, and we can see what your, particular situation is and share insights from others who might have had the same challenge.
Okay, Andrew, and we're right out of time, just right on the nails. So just remains for me to say, thanks very much, Andrew, for your presentation today, which I'm sure everyone will agree has been really valuable. And you can reach Andrew at the contact details that were on screen just a moment ago, or feel free to contact me at tim.richards@mgaa.co.uk with any questions or introductions, and I'll be happy to pass these on. Just a reminder that the MGAA annual conference is at Old Billingsgate on the 10th of July, and I hope to see many of you there. And Dynarisk are going to be there too. I don't know, do you know your stand number offhand?
I don't have it offhand, but
Right.
I will be there. Some of our other colleagues will be there. We can follow up with questions over email, or happy to have an in-person chat or a coffee at the event.
Sure. Great. And for full details of the MGAA annual conference, have a look at our website. So thanks once again to all of you for joining us. Thanks again, Andrew, and we'll see you all soon.
Wonderful. Thank you very much.
Thank you.